The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Friday night here in Asia. That means Friday morning there in the States. And we're going to get right into a new version of the scanner that we've got up right now. We've got some snapshots on the left here, our landscape view. Have everything at your fingertips. You can scroll back and forth between heat maps, landscape grids, indices on different time frames, and go back to the dashboard. And we've added some things. Just this is a beta version, but we're going to have a complete rolled out version Monday, Tuesday, and then that's going to be the user password thing that TFNN was looking for. But we've added some really cool things here. The we had the LSLs new box attempting to appear, but basically, those are cells that are green or red and attempting to possibly have a change in tone. So we kind of marked that a little differently. Actually got a heat map look to the cells themselves, above significantly or barely above, as you can see. And we've got some color-coded help type tabs down here. We've also got a TAS says icon over here that makes it a little bit easier to hit those things. And also, when we go into the heat maps, you've got that TAS says breadth little paragraph icon that was up there. Now it says TAS says. And we've actually got some more features going in by Tuesday just to clean this up even a little bit more. So let's get right into one of the things that we were looking at yesterday. In fact, I've got our S&Ps up. We talked yesterday. Okay, this is our daily, and this is our daily. We talked about there wasn't a lot to hang on to up here. I wasn't feeling very rosy about going long this particular instrument. Oh, Steve, when you see this thing in its completion by Tuesday, I think you're gonna have a good feeling. Anyway, so as we look at the S&Ps, the situation that we were at is, our breadth situation was a little mixed up, and as we look at this, we've gone a long way pretty quickly. And this most recent bounce, obviously, the market likes the concept that we're not going to raise rates anytime soon. That was kind of the one economic report. I mean, geez, for what that's worth. But as our breadth was kind of dangling in positive and negative territory, we didn't have a lot of conviction behind really getting a long sense to this. And as we look at down our 240 line, what we're going to do here is we're going to revisit what we were talking about yesterday, talking about we'd had to have gotten back down below 2100, or a new profile had to appear on our 240 grid to really start thinking about looking at this from the short side. Now, if you take what we talked about yesterday into consideration and the passing on the longs, and that sucks really to pass on this particular long, a 20-point rally yesterday. The good news is, in my opinion here, if you were tuned into the shows, you didn't really get into any trouble because there wasn't any new information to really hang on to or borders that were crossed down below to really start getting into the short camp. It was a pass on the longs and just wait patiently. A lot of times it's not a bad idea to not be in the market and, when the probabilities aren't in your favor. So as we look at this, here's our weekly view. And we talked about, if you step back and look at this weekly and daily, okay, Logan, you're above profiles here. Come on now. But the breadth situation is what we passionately look at to trade some of these indices. And as I looked at this, we're starting to spin a little bit higher here, but this was a precarious situation, and I'm going to take this at its face value as something that we've leaned on in the past and done our back testing on. So, again, that's kind of the take on the S&Ps right now. What do you do now? As we look at these charts, do you go long up here? No. Do you wait for some new information to appear? Yes. And do you still reference our breadth on multiple time frames to try to figure out which angle to take with this particular product. So let's move on to the dollar. Not a lot of new news here, except for we've had a little bit of a bounce off the bottom, and we talked about, is it, chart got really small. Let me see. Try to redo the den here. How are we looking now? Better, worse? Okay. All right. So as we look at the dollar, we talked about, is there any reasons to go long down here? In my opinion, on the intermediate and long-term scale, no. We had a new profile appear on our 240s in between now and the time of the show, and we had a orange bar appear. This is really kind of a little bit of a short-term trading opportunity, but you're really going to, on a long-term scale, you really don't have a kind of a sea change going on yet. No new demand areas down here. Not a lot of conflicting information with some of the other things that we look at. And one of the reasons I'm bringing this up is specifically for one reason. We're going to go back to the yen. And we talked pretty religiously about not shorting this thing basically ever and trying to find support areas and breakout areas. So now we're getting that breakout, might have a close above 119.69 again on the yen. This is the best trade on the books, in my opinion, folks, and it's been the best trade on the books since 101. That was about 2,000 pips ago, and we're still turning the rents the same way, looking for support on this particular product. As we look at the yen, we're going to reference our euro just to cover some of the currencies on our first run here. And we talked about, is this a decent situation to kind of lay some wood to on the short side? Not yet. 115.34, that's the drill there. And I'm just kind of staying away from the euro until we get some either rallies up into 115.34. Let's see if I can get this thing to adjust here. Here's the dailies, nothing to hang on to there. Would love to see a new profile. Will give us something to hang on to. And on the very short term, still nothing there. And again, I don't think the euro is to be shorted yet. All right, let's go into a dollar-related product again. Let's just take a look at, where's that? Well, am I missing? Oh, here we go. All right. We talked about the 1210 and we talked about the 1229. And yesterday we hit 1228. Basically, this is 1228, rounded off 1229. And yesterday we hit 1228, rounded off 1227.7. So we talked about that being a possible top target and also, in my opinion, maybe a short opportunity. So that was about 14 points ago, or $14 an ounce in gold. Here's the daily situation. So we always talk about close above, go back and retest. This is that 1210 area. We've hit 1210 this morning, and in the last 24 hours we've hit about 1228. So that was the target up top environment, and now we're coming back down to support. But do I feel rosy about gold? I just, what, I'm not going to feel rosy about gold till we clear 1230. And I still think we're going to rattle around here, and I don't see a lot of direction down here. I see gold looking a little more trading ranges, the trading ranges than, is that a word? Than anything else. And I'm still going to stick by that. We've talked about maybe opting out on some, getting heavy on the long side with gold lately. I'm just going to stick back to that. It is now. Yeah, I hear you. That was just a butcher job of creating a new word, by the way. I think Steve Rhodes would fully agree with that. Here we go. Here's the June on the 10-year. We talked about that 127.11 area. Today's Friday. Going to have a hard look at this close today on the weekly, and then I think it's going to be okay to look at that 127.11 again as major league support, actually, for the Treasury 10-year product. So, I don't even know if confluence is a real word. Is that even in the dictionary? I've kind of used it a lot, but I'm not sure if it's in Webster's. Maybe somebody can look that up. I hear what you're saying, Mr. Rhodes. Don't know if it's real. Don't know if that's a real word. Confluence. Here we go. We're going to take a look real quick at the DAX. This is something and our weekly, that 11,430 is going to be something that we've talked about using as a leverage point in the long-term support area in the weekly. I don't really see, I love to trade the daily inflection points, and folks, there's just nothing down here. We're just going to kind of hope and pray that we get a new profile. Then we can kind of have some things to leverage against. But right now it's very abyss type situation to me. I just don't like stepping in to situations like that where I don't have a new demand or supply area on the daily situation. Okay, there's a 240. We're going to take a look at silver. This is something I was going to cover right after gold, but gotcha. Basil, I love that term. We talked about the silver situation, and we talked about some targets at 1717 on the north side. That's out without question been surpassed, and we also talked about waiting. Let's see if we can get a weekly close above 7. After we use that as a target-rich environment, hopefully we could then, as we passed it, take a look at the weekly close on that, and then we might be able to look at that 1717 as support for next week. Again, that kind of remains to be seen yet today. I mean, silver can reverse, and we just have to keep our eye on that. I don't see a lot of big-time reasons to get into silver today. I just think we've had a good run. We've met some targets. We were pretty right off that 1625 area, and that's kind of the way I'm looking at silver right now. That's just kind of a sit on your hands trade, in my opinion. Maybe we can get back into it next week. November beans, we almost got to that 942.5 area. I talked about just waiting patiently. We reached a high of 941.5, basically. I'm going to call that satisfied. I love the way this is acting. I love this thing on the downside, and I love putting stops above 942.5 based on your appetite for risk. I think we've kind of satisfied the close below, go back and retest. And this retest, thanks, realist. I didn't know if that was a real word or not. I'm from North Carolina. We don't know too many real words down there. But as we look at this, the 940 area in the weekly, I just want to see this Friday close below this 940, 942 area on November beans. And then I think this thing could really, really get some legs on the downside. A lot of reasons for that on top of the profiles. Guys, we're going to be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome to back to the show. I was kind of off in dreamland thinking about the eastern part of North Carolina. Somebody that Dan was talking about living in Beaufort. Man, if you've never been down that way, do yourself a treat and get down there. And when Rilla said he was there for the fishing and the scenery, I always remember there was a show called The Carolina Sportsman when I was growing up, and I forgot the guy's name, but at the end of the show, he always said, "Do yourself a favor and take a kid fishing." And it's that down there in that part of the state, it's just a really fisherman's paradise, and great people, great food, good spot to be. Still down home. Anyway, we're looking at the scanner right now, and what I wanted to point out, as we've had these rallies, we always kind of want to look at a relativity type trade. I've got the S&P 500 components up right now, and colors are still a little gaudy here. We're trying to find out the right hues, if you will, to get these kind of a little bit more, they say if you look at bright colors for a long time and gaudy, it'll drive you nuts. And that's why in a lot of prisons, they have pastels all over the paint and everything. So we're trying to calm the colors down, trust me. But as we look at this, we want to take a look at, because people are in prison a long time sometimes, and that's why pastels seemingly have the less nervy effect on people for the most prolonged periods. Below the box, here we go. Let's take a look at our daily sort. Just forget I said that. And we're looking at stocks that are just not cooperating. All right, and these are the ones that we want to try to pick off. And as you can see, the darker reds are farther below the profiles. The lighter you get into the lighter hues, the closer they are to the profiles. But just kind of throwing that out the window. Let's look at our weekly sort below the box here. And the theory is Yeah, you know what? The theory here is the relativity trade is to try to find weak stocks in a market that just continues to climb. So we're going to look at a couple of the usual suspects. Union Pacific, Waste Management's been on this list, Wynn Resorts Limited. These are stocks that can't get out of their own way and are still on the imbalanced side on the south side. Norfolk Southern, Murphy Oil, I got to tell you something. Murphy Oil, this is one you kind of put in your grandkids' college fund but you don't go long, you go short. This one has been the eternal piece of just dog turd here. We've also got a couple other candidates, and we're going to look at those in the charts in just a second. I'm just going to Fossil, Gap, Kimco Realty's been on here for a while. Kohl's. Let's see what else. Ford Motor Company. We talked about that the other day. Duke Energy, Coach. We're going to pick some of these out. Best Buys. So let's take a look at Fossil. FOSL. Here we go. If you've never taken a ferry to Ocracoke, do yourself a favor and do that too, realist. It's an outer bank, and you get to it from Swan Quarter or Cedar Island, and a really cool ferry ride. And when you get out to Ocracoke Island, there's not much to do except relax and enjoy the place. And it's one of the only places I think I've been to in the United States. You can get on the beach there and look. It's a national seashore. Steve Rhodes National Seashore. And as you look both ways, you get in the middle there and you look both ways. It's an island about 14 miles long. No houses, no nothing. It's just an untamed, untouched, beautiful beach, sand dunes, sea oats, the whole 9 yards, and just gorgeous. And there's dunes high enough down in Kitty Hawk, by the way, Kill Devil Hills, where you can actually hang glide off of them. They're so tall. But anyway, that's another show. We're looking at Fossil. Here's why the scanner picked it out. This is our weekly view. Get below profiles 8186, close below. This is our long term. This is our intermediate term. So the scanner's just letting you know that the leverage points ahead of time have been 80.44 up into 81.86. Why? That's the weekly and daily unfair lows. And how do you trade this? I think the good news is that DMZ 80.44 and 81 and some change. You can orient stops above there. I think this might be a good long-term play. We've come down pretty good from the highs here, but again, this has just been the most uncooperative situation relative to the S&Ps floating up you can find, and this is the kind of thing you want to put on your radar screen. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and we're taking a look at the scanner again. We're just pulling out some, and the reason we're looking at the stocks that are or the equities of the S&P 500 that are just not cooperating is because if we do have a market that just turns south, these are the ones that theoretically should fall apart a little faster and wholeheartedly than some of the stocks that are actually hanging in there that are driving this index a little bit higher. So we're going to take a look at Costco. We're going to take a look at Coach really quick. This is Costco. This was on our radar screen earlier this week. And, it really, as the S&P's kind of been drifting higher, it kind of showed itself. And this week just really has been an abysmal situation. 146.52, as you can see there, that kind of closed below, go back and retest, never getting out of its way, and then finally giving it up. This is kind of a dream scenario. I mean, this is one that's really showing its hand. Scanner picked it right out. We're going to take a look at COH now. You can get those inflection points right in the scanner too. You're saying, well, God, I don't have the charts. Well, when you kind of mouse over these things, it gives you those numbers, 146.52. There's the 145.52. Here's our landscape view. Gives you all the multi-time frame levels and the level of the market, so to speak. So I'm gonna let's see, and I can actually. That's in our landscape charts. I'm sorry. We're going to take a look at Coach, COH. This is our daily. Let's just go into our weekly. This is one of the, we had some, obviously some earnings announcements on this situation. Profile appearing above price action. We talk about that a lot. Profile appearing below is price action is very bullish. Profile appearing above price action is very, very bearish. So, you've got something that's an overhanging bearish sign here. You've crossed some borders, and you've got some technical damage going on. And we're going to kind of go down to another time frame to kind of trade this, and that new time frame is the daily. So you've seen that resistance, 39.06. This is all in the scanner. Gives you the inflection points to pay attention to. So the weekly technical damage, go back and retest. Now we're looking at another version of a breakout possibly here, 37.79. If we start heading south, and especially get a daily close or a weekly close below there, we can use stops oriented right above there. I think this is a relatively low-risk trade considering what the market's been doing in general. I love the way this is acting. Let's go back to the scanner and let's just kind of let it keep running the show here. Ford Motor Company, all right? So this is interesting. We've got a kind of a yellow shade popping up on the right side there, and this means that we've got a new 240 profile attempting to appear, and that's within the current profile. So this doesn't mean too much. When it means quite a bit, and let me just kind of wait for this out. We don't have any here right now. Let me go back to Ford Motor Company. So as you can see, this is weekly, daily, 240, 60. And what we're going to do here is we're going to go to Ford, and we're going to pull this up, and we're going to see what it looks like. And I'm already looking at this from the bearish side without even having to look at the charts. And 1569, we talked about that, and now we're getting into some lower numbers. Now, we were looking at Ford last week, I believe, and we talked about this 43 into 69 area being a possible collection area. And let me pull this up. Okay, actually, and the only way to get long this was to get back above and clear and close above those borders. That didn't happen. So now we're drifting lower. Now it looks like a very, very decent $15 short trade. Remember Alcoa? Let's take a look at that. If I can get it to come up. I just want to pull up another relatively cheap stock. And this was one that we caught some good momentum off the $15 area and caught it down into 12 and some change. Is that a risky trade, shorting a relatively cheap stock? You know, put your stops in, put, you know, your percentage gains as your targets, or let the profiles regulate this trade. I'm very, very okay with shorting relatively cheap stocks when the stocks are showing their hand, especially a bellwether like Alcoa. Here's the daily situation here. Still not the rosiest picture here for Alcoa. Still could take another dump down, so we're going to keep our eyes on that. But that wasn't in the scanners, the ripest opportunity right now. So we're going to go back into the scanner. We're going to take a look at Murphy Oil. This has just been tough to watch. Pull that back up really quick. Murphy Oil. All right. And we've been talking about this one for a long time, actually. Why? It gives you a lot of good trading opportunities, this particular stock, and it continues to show its hand, even, you know, with any type of, that was the weekly view. This is our daily last nice little leverage point, again, showing its hand early, 48.84. I mean, there's nothing down here, no reason to take the shorts off. If you want to use the 240s to regulate the trade, look at this. This has just been, you know, a couple of little disturbances here, but on the last tranche down from 50, you got 6 points in it without any pain whatsoever playing this game. And 6 points divided by 50 is a 12% move down in a matter of days, actually. Not a bad little trade. On that note, let's take a look at crude oil really quick. All right, so we've been talking about this area 59.90.60. This is our daily view. This is June crude. We're drifting a little bit lower here, but we're not drifting with conviction. And I'm going to just kind of restate that the major game here has been breaking, having some technical damage on the upside here, and being able to consolidate and move higher. So that being said, that's our weekly situation. Here's our daily, and here's our 240. Now, it looks like we're having somewhat of an issue here of trying to hold our ground on the top inflection point on June crude. So what do you do with this now? We got 59.95 unfair lows on our 240, 59.90 daily unfair highs. So what I'm going to do is, considering that I'm not a huge fan of shorting crude oil right now, I'm going to wait again until we possibly get back above 60. Sometimes you've got to kind of set a barrier too. A lot of our automated systems, we set hurdles that instruments have to, when they go profitable or go in the direction we want them to, they have to kind of clear a certain amount of points before we consider it a valid, reason to get in the trade. So on a lot of profiles, and this is case in point, let's just take 59.90. So we'll say, you know what, this system has a 12% height to the box hurdle that it has to get past the inflection point to prove that it's not a noise factor around the major battle point, considering this 59.90. So we might say that, we want to get above 60.25 before we actually start looking at this from the long side, either intraday or on a closing basis. And that just kind of lets us get clean and clear of the, of the noise. I don't know how else to say it. And that way we feel like we get a valid, and, you play around with that and you do back testing, and it's amazing, how some of those little techniques will enhance alpha, as they say. That's the new, I hate, alpha, whatever. Here we go. Let's take a look at the XLE. We got to, after we looked at crude oil, we're forced to. Here we go. Again, sitting right here, major support around 80. We bounced off that a little bit last week, and we're coming back down into it. This is not the greatest looking chart in the world, eyeballing it, but I like the way we've got some coincidental things happening on the momentum side on some other indicators. So I'm still okay looking at this, buying the 80 and the 80.87 DMZ, and seeing if we can get a pop and get crude oil back above 60 there. So, where do you put your stops? In my opinion, you got to put your stops below 80 and be able to say uncle below there, and just kind of, take your medicine if that's the case. So, all right. So going back to the scanner, we're going to take a look at a couple other situations that might be relative. Ralph Lauren, this is, RL. This is something that we looked at a while back and just really haven't looked at in a while, but do you want to be in this stock long? I don't think so. I mean, this thing's not on sale. It's the $130 stock. It could rally. It could, rip your face off for 10 points without a question. Make sure you put your stops in. But as we look at this, it's ugly. Does it deserve to go lower? If the market turns south and starts cruising, and we don't know if that's going to happen on the S&Ps or the sector that this is in, but this would probably be one of the first things to fall. Let's take a look at Norfolk Southern. Let's see. Here we go. Here's this week. I mean, this is people forcing themselves to have to cover. You got the magical 100 area that's been breached, been on a trail down. We were sitting. This is the terrifying thing. I don't like the double, triple bottom, quadruple, all that kind of stuff. To me, it means when a stock continues to go to that area at some point. In classical technical analysis, there's a lot to be said for that. But this to me looks like it was kind of more of a pressure game, and then finally boom. And that's when you have these holes in the marketplace, that's when you can make money in a very compressed time frame. And that's what you're looking for as a trader. You're looking, and that's why people fall in love with shorting things, is because things usually, except in the .com era, things usually fall faster than they go up. And that's, the longer you trade, the more you will be inclined to take a look at things from the short side, because that's where you can make the most money in the shortest time frame most of the time. So here we go. Let's go back to the scanner. Man, I love this thing. Oof. Let's take a look at Waste Management, WM. Actually, let's take a look at Windstream Holdings, WIN. Achie mama. Oof. That's ugly. Oof. All right, so 1225. That was, and again, again, people out there going, why didn't you tell me when it was 1225? These are available and very apparent in the scanner. Now, as you can see, we had a profile appear above price action. We went back and retested to the tick, and that was basically with that 1325 area on the weekly unfair lows. This was kind of a dream scenario. So, the scanner's going to put those in your face, and you're going to be able to, just like when you see Wisconsin Energy Corp bottom, it's sitting right there at the inflection point. There you go. Right there. All right. And as we look at this, let's see if we can get two lining up here. Well, let's do this. Let's do bottom, bottom. All right, so here we go. Pfizer. Let's take a look at this. All right, as you see this is providing trading opportunities. And I love to look at things that are, and I could go in here and go, what's trading on the top and the bottom at the same time, whatever. Cardinal Health, CSX. These are providing really good situations to try to leverage dual time frame inflection points lining up. So let's take a look at Pfizer. How do you like how quick that thing is relative to the web scanner? Oof, night and day. Okay, so what this is doing is it's saying I'm in the vicinity here, weekly unfair lows, 33.82. I'm hanging in there, and I'm also hanging in there on the daily. So, Pfizer has still got his head above daily and weekly DMZ. But considering what the market's doing, drifting higher, and Pfizer's kind of consolidating and sitting on its low part of dual time frame profiles, keep your eye on this one, because if we migrate down below 33.82, especially have a weekly close below there, this one we may be able to put on the short candidates list for a little bit. Okay. Let's take a look at scanner again. Nextera Energy, NEE. Let's take a look at that. These are just picks that are, you just want to look at, put on the radar screen. They're sitting around two different time frame inflection points. This one, tails to be seen on this one. You got the magical 100 area, 140 weekly unfair lows. More than likely, that provides somewhat of a bounce in the short run. We've kind of already done that last week, so keep this on the radar screen too. 176 down into 148 with DMC on this one. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, we're looking at the scanner, we're looking at the XLE stocks, and we're looking at the breadth on the XLE stocks. Intermediately, pretty negative here. That's not boding well for the XLE in general, but and this is basically comprised of how many XLE stocks? 1, 2, 3, 60, somewhere in that neighborhood. Anyway, we're going to take a look at some XLE stocks that might be hanging in there. I'm going to take a look at Cabot Oil and Gas Corp. Maybe take a look at the trend is favorable longs and has been enforced for 7 weeks. Primary long support 3303. Be on the lookout for new. Okay, so let's go right into. That is so cool. COG. COG. Here we go. All right. So obviously the weekly. Thanks for telling me now. 3027 was the breakout point. And again, if you watch this thing, it's going to give you these great picks. This is Cabot Oil and Gas Corp. We've been looking at this for a while. We actually looked at it this past week, and 34.53 leverage point. Turn the rents the same way. If it ain't broke, don't fix it. You can orient stops around these 34.53s. Here's the 240s. This has just been an amazing run up here. So what do you do with it? Again, if it ain't broke, don't fix it. Strong stock in a strong market. 34.91. You could orient stops below there on the short term. It's not too high. It's not too high. Let me say that again. Things aren't on sale and they're never too high. On that note, my friend the other day traced the 30-year. He goes, man, I got the 30-year 10 years against me. He literally does. I mean, I think he's been short the thing for a pretty good while, a couple of years actually, a couple of contracts. He's in Chicago. He just won't let go. I was laughing when he said I got the 30-year, 10 years against me. Anyway, it's funny to me. Anyway, here we go. Let's take a look at a couple other ones. Let's see. Console Energy, CNX. All right, now this one's looking relatively attractive to me. We've had a decent pullback. It hasn't been the best energy stock to take a look at. And when I say attractive, this one, it's putting the borders in your face, 30.34. And 31.34. So, it's been something that's rallied with the old situation, and it's rallied. What is this? 8 blah blah blah. That's a 30% rally, folks. So we're coming back down into some of these inflection points. I'm for highs on the daily, I'm for highs on the weekly. So, what do you do with it? With me having the long crude oil bug on me, I think we've got a decent pullback into this inflection point. The good news is you can orient stops down below. And I actually like this from the long side, CNX. Still hanging in there by way of the scanner, too. Transocean, rig. Here we go. To close the show, we're going to look at rig. Weekly, breakout, 1770. Trade 2081 right now. Let's take a look at our 2057. This is a daily situation. I still think you got to wait pretty patiently on this for pullback to the 1943 with stops down below there. Thanks, guys. Steve Rhodes is next. Hang around. You'll love his show. We'll be back Monday, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.